Hey everyone, welcome back to Corporate Decoder, the place where we take apart company reports and explain them in simple terms. Today we're diving into Exicure Incorporated's Form 8K filing. Don't worry, it's not as scary as it sounds. Think of it like this. We're figuring out what Exicure's been up to and whether it's something to celebrate or something to worry about. We'll be going over stock sales, agreements, and even some real estate news. By the end, you'll be able to impress your friends at parties with your knowledge of, well, Exicure. So let's get started. This report is about events that happened on or around Valentine's Day of 2025. So instead of chocolates and roses, Exicure was dealing with stock agreements and real estate. That's business for you. Here, Exicure got into an agreement that is important or has big consequences for their business. It's not just a small contract, but something that can really move the needle. So they made a deal called a common stock purchase agreement. This means they sold shares of their company to some investors. Think of it like selling slices of a pie, the pie being Exicure. On that day in 2025, Exicure sold shares to two companies, Xinchang Partners and RMS 0718 Co. Limited. These are the folks who bought a piece of the Exicure pie. This part means that Exicure doesn't have any other major business connections with these companies besides this stock deal. It's simple, straightforward transaction. This is like a disclaimer. It's saying that the description of the agreement here is just a summary. If you want all the details, you need to read the whole agreement itself. Think of it as the difference between reading a book review and reading the whole book. In addition to selling the stock, Exicure also made another agreement related to registering these shares. Think of it as making sure the new shareholders can freely trade their shares in the future. This agreement, called a registration rights agreement, is all about allowing the investors to resell their newly acquired shares. Basically, it gives them the right to register the shares with the Securities and Exchange Commission so they can be freely traded. Exicure promises to file the paperwork to register these shares within 60 days of the deal closing. It's a deadline to make sure things move along smoothly. If Exicure misses that deadline to register shares, they might need to pay the investors some money as compensation. It's like a late fee, but for paperwork. Exicure is offering the investors some protection against any problems that might arise with the registration process. It's like insurance for the registration. Again, this is a reminder that what we're reading is just a summary. For all the nitty-gritty details, you'd need to read the full registration rights agreement. This section is all about how Exicure sold these shares without registering them with the SEC beforehand. There are certain exceptions that allow companies to do this. This is just saying, remember that stuff we talked about earlier in 1.01 ? It applies here too. It avoids repeating the same information. Exicure is saying they believe they were allowed to sell the stock without registering it because they met certain conditions. It's like claiming an exception on your taxes. This part of the report covers anything else important that happened that doesn't fit neatly into the other categories. It's kind of a catch-all section. On Valentine's Day 2025, Exicure ended their office lease early. They basically broke up with their landlord. Since they ended the lease early, which was supposed to last until June 2030, Exicure left their Chicago office and won't have to pay any more rent for it. Ending the lease didn't cost them anything extra, and they'll actually make $6 million because of it. That's a pretty sweet deal. Think of it as getting money back from a cancelled subscription. This section lists all the extra documents and financial statements that are attached to the report. It's like the appendix of a book. So what does all of this mean for Exicure? Well, selling stock gave them some quick cash, about $2 million, which can help fund operations or pay off debts. It's like a mini infusion of energy. They sold it at $5.50 a share. However, selling stock also means they're giving up a small piece of ownership of the company. Existing shareholders now own a slightly smaller percentage of Exicure. Also, there is risk. If the company doesn't file registration paperwork on time, there can be late fees and potentially bad publicity that hurts investors' trust. Now, about the office lease. The gain could really help their bottom line. It's a one-time boost that makes their financials look better. Overall, Exicure seems to be taking steps to improve their financial position. The cash from the stock sale and the gain from the lease termination could give them some breathing room. However, investors should keep an eye on how they use this money and whether they can continue to grow their business. The early lease termination and cash gain may be an early signal that the company is on the right track. Based on the information we've seen, a reasonable price range for Exicure might be somewhere between $4 and $6.50 per share. This assumes that they can continue to execute their business plan and manage their expenses effectively. With this in mind, I am leaning slightly bullish about this company's future. I am setting a price target of $6. Thanks for watching. If you found this breakdown helpful, please subscribe, like, and comment below. What company should we decode next?